Really warm welcome to both of you. Really excited to be having this conversation today. And really excited to be talking about regulation, everyone's favorite topic, which of course is something that we have to deal with and we have to talk about. And sometimes it's a nice conversation as well, and kind of nice thought starters about why this data is meaningful for us, in addition to us, of course, having to report out on it, why we have to report out on it, and why it's benefit to us to collect it. So maybe first things first, it would be great for us to do a quick round of introductions, so our wonderful guests know who we are and why we're qualified, hopefully, to discuss this. And so I'll maybe pass it over first and foremost to you, Aga, to introduce yourself.
Thank you, Anya. It's a pleasure to be here. My name is Aga Shimiganowska, and I lead on sustainability at Oakley Capital. We're a European-based private equity fund investing in tech, education, consumer, and business services sectors. We have 35 portfolio companies at the moment, mostly buyout, but a few minorities as well. And we work really closely with all of our managers and all of our companies on sustainability topics, which include everything from environmental, social, and governance, but specifically on social, we really focus on employee engagement, diversity metrics, and have been working with Diversio for a few years now, both internally and for our portfolio companies. Pleasure to be here.
Wonderful. Thanks, Aga. And Emma, I would love to hear from you as well.
Yes, hello. So lovely to be here. And thanks again for hosting and for having me. I'm Emma Bickerstaff. I'm the Managing Director of Holtara. We are the Sustainability and ESG arm of Apex Group. We're around 180 people. We offer both software, so ESG reporting software, and also a very big advisory offering. And of course, regulation. And importantly, this topic is something that we see a lot of and talk to our clients about on an ongoing basis. So really pleased to contribute to the conversation.
Amazing. Finally, infinitely less impressive, I'm Anya. I'm the co-founder and chief operating officer of Diversio. And we are a platform that helps organizations collect diversity, equity, and inclusion data from their workforces. We help them report out on that data. And we work very closely with investors who have to report out themselves and sometimes have to motivate their portfolio companies to do the same. Really excited to be having this conversation. And I think to kick things off, Emma, and to sort of set the stage, I might pass it over to you. I believe you have some slides to share with us to kind of educate us on this emerging regulation.
Yes. I will just maybe talk through the slides, and then Kate might be able to give me permission to share. But I think it's important to maybe contextualize what we're talking about here. I think the title of this webinar was really around the ESRSs and what we call S1, which is own workforce. And we wanted to start by sharing exactly what that means and how that fits within the regulation called CSRD. And Kate, just as you're giving me permission to share, I'll just have a quick chat through what the CSRD is all about. Many people will be aware that the CSRD is a new and emerging corporate regulation that forms part of the Action Plan on Sustainable Finance, which in turn is part of the EU Green Deal. So the Green Deal that was set a number of years ago had quite a few objectives within it. One of them was around driving sustainable finance and the actions that the EU would take in order to improve sustainable finance across the region. And from that, we saw three new regulatory developments. One was called SFDR, which is a compliance regime for managers and investors in Europe or marketing to Europe. One was around EU taxonomy, which was the launch of a dictionary around what we can deem a sustainable activity. And the third, which is what is most relevant for our conversation today, was called CSRD, the Corporate Sustainability Directive, which is really around focusing on corporate sustainability information and trying to address the challenge, which is the underlying portfolio companies of private market managers and indeed even public market managers really was sort of not up to par, and the industry felt that we needed to encourage companies and corporates themselves to improve the sustainability information that they would share with their managers, investors, and also the general public. And that is really what CSRD is focusing on. I can see. So the other aspect of CSRD, I think, is around something called the ESRSs, and this is a really important aspect of the CSRD. Thank you so much, Kate. If you could just go to the next slide for me. Well, first of all, actually, let's cover off who's in scope. So CSRD is really focused on corporates, and I think the interesting thing to note here is around when different size companies need to comply with CSRD. So there might be people on this webinar who are wondering whether they are in scope for this, and therefore whether this concept of sort of S1 is relevant to them, and we'll get onto that. But at a broad level, in terms of the CSRD timelines, the reporting dates for large companies falls within 2025, and that's to report on the financial year 24 in terms of sustainability information. For other large companies that fulfill a number of these requirements, and you'll see there's a requirement around, you know, headcount exceeding 250, assets exceeding 25 million, and also net turnover exceeding 50 million. If you fall in scope for any of those characteristics, then you're required to report in 26 on 25 data, and then SMEs in 27 on 26 data. So it's very much a phased implementation. And then in terms of the ESRSs, which we'll just go to next, Kate, if you don't mind. Thank you so much. So this is a little bit around the structure of CSRD. So you can see this concept of standards, and we call these European Sustainability Reporting Standard, ESRS. And there are a number of these. The first couple are general, and every company in scope is required to report on both general requirements and general disclosures, and that is what it says, sort of really general information about the company and their sustainability profile. And then there's a series of topic-specific ESRSs that are grouped under E, S, and G of the ESG, so environmental, social, and governance. And one of them, you will see there under S, is S1, called Own Workforce, which is really the focus of our discussion today. Now, in order to determine whether you need to report on own workforce, or indeed any of these ESRSs under the topic-specific section, you would need to conduct something called a double materiality, and that is to determine whether these themes are relevant and material to you and your company. And a double materiality assessment is a fancy word for really picking apart what is financially material versus what has an impact materiality. And what that really means is, what is the impact of the world on your company? And in reverse, what is the impact of your company on the world? And both of those dimensions need to be considered in order to determine which of the ESG topics are relevant. And at Holtara, we do a lot of work with clients in helping them work out exactly what elements of this standard they do need to report on when their reporting deadline hits. But today, that was a little bit of a scene setter. We're going to dive into S1, which is called Own Workforce, all about DEI and employment-specific information.
Amazing. Emma, thank you so much. That was so comprehensive and very interesting with regards to our emerging reporting needs and, you know, why we need to be focusing on them. I think now for everyone listening in, we really just wanted to have a conversation about our perspective on these emerging regulations, the need for reporting, and effectively how, despite the fact that you have to be collecting this data and reporting out on it, it can also be a benefit to you. And maybe first and foremost, I would love to turn it over to Emma because, apologies, I'd love to turn it over to Aga because of all of the people on the call. I think you're most closely familiar with having portfolio companies and having reporting needs. And so just wanted to get your perspective on this regulation, how it's sort of how you're thinking about it alongside with all the other reporting that you need to do. I know that you're in the throes of reporting right now, so it's kind of ironic that you're pausing to do a panel on reporting while reporting.
Indeed. It's a sensitive topic at the moment. Many of us have reporting deadlines at the end of the month, so I feel your pain. But yeah, so CSRD is the next kind of acronym and a really significant regulation that's going to impact a lot of companies, a lot more, right? So a lot of sustainability and ESG related regulations start at big multinationals, big corporates, and then start to trickle down. CSRD, the thresholds, as Emma pointed out, are actually super low. So we're finding that many of our companies who are on that kind of small to mid-market size haven't had a regulatory driver, so haven't had that stick in the past to make them collect or disclose this information before. And all of a sudden, they are just crossing that threshold of either 25 million in revenue or 40 million in your on your books, or 250 employees. But it's actually the revenue and accounts ones that actually trigger a lot of our companies to be in scope. And it means that now they need to start thinking a bit more strategically around how they approach sustainability. Which fits in line with what we try to do with them, right? So when we make an acquisition, we onboard the team onto kind of what we do as an investor and what our expectations are of the company and how we'll support them along the way. I think CSRD is going to kind of streamline that process a bit more and really focus management teams' minds around how to do this. And the way we're communicating it at the moment is that if you get senior management buy-in and include them in the conversations early on right now, this can be a really interesting strategic proposition where we can help you identify kind of sustainability related opportunities that you may have not have seen before, and will help drive the value of the business. If you don't get the kind of management bought into this, it will become a compliance function, and a very expensive compliance function. So kind of what we're hearing in the market is that it's a really big piece of regulation. For small companies, it's going to be a huge burden. You need to get all different departments working together, coordinating, reporting. And the other thing with the CSRD is it needs limited assurance. So you're going to need to have your auditors kind of in the room from an early stage during that double materiality assessment, as Emma mentioned, to really help them understand why you think certain topics are material and certain topics aren't. So that's a really long-winded way of, again, setting the scene to where we are. Where we are at the moment is actually trying to figure out what support our companies need. Because there are different levels of sustainability maturity. So some of them really don't need much support. They just want some guidance, whereas others really need a lot of handholding and a lot of support through this process. So we're trying to figure out an approach for that. And the first bit of that is that double materiality assessment, which can be really complicated and tricky. We've been doing materiality assessments with our companies for the last, I guess, 4 years. We always do them and review them on an annual basis, but the CSRD is a very prescriptive way of measuring kind of that double materiality. So the first thing is getting everyone on board and understanding what that means. And that will help identify what are the material topics for your business. And I think the DMA is a bit overcomplicates things in many ways. I think business leaders know what is material for their business. And they may not always be positioning it from a sustainability or an ESG angle, but they will know what is important. And with the CSRD, it's a comply or explain regime, right? So you have to kind of comply with what is material to you or explain why something is not material to you. So in many instances, E1, which is the one around climate risk, is kind of seen as a given. It's going to be material to all businesses. And if you don't think it is, you're going to have a really robust explanation why it's not. I also think that S1 around your own workforce falls into that same category. You really, all businesses rely on people. So you need to have a really good explanation as to why you think your employees are not material to the to your business, to the functioning, to the value of your business. So I think I think this is one of these ESRSs that will be important for everyone to understand, and really management working with the teams at each business that are responsible kind of for people, for diversity, for all the kind of metrics that the F1 tries to measure. I don't know if I answered your question, Anya. I just went around in a circle a bit, but
you totally did. And I think that was really, really helpful and well put. I think what really resonated with me kind of in what you said as well was the fact that for companies, you can almost like go one of either routes. You can either, now that you have to collect this data, you can kind of make the best of it, and you can understand how this data can help you and can actually be very valuable to you and for the performance of your business. Or if you're not able to do that, it will become a very expensive compliance function that you're not leveraging it to its full extent. I think the reason really resonated with me because so for everyone listening in, Diversio, so our company actually works very closely with IGA's or firm, so Oakley Capital, on assessing their portfolio companies from a diversity and inclusion perspective. And so their portfolio companies leverage our software to deploy with their employees to understand who their employees are and then how their employees are experiencing the workplace. And the idea, of course, is that you want to be improving that over time. And it's interesting because a lot of the data that we actually collect could be used for these sorts of reporting needs for these companies. But for a lot of your portfolio companies, this is our second year in a row doing it. I feel like they're not really doing it because they have to do it. Like they're not really doing it for the need to report or because it's, mandated by Oakley or what have you. They're doing it because they're actually receiving value from the data and the numbers, and they're taking it back and they're leveraging it to talk with their leadership teams and make plans for the year about what they're going to be doing to, become more diverse or streamline kind of representation in leadership or become more inclusive. So Iga, what is your perspective on that? Like having kind of living this now with us for a second year in a row and seeing the way that your companies are interacting.
Yeah, and it's a really good point. So we don't mandate everyone to do this or actually anything. We just expect them to be able to report data to us back, and we will help them when they don't have it. So we identified a gap a few years ago that many of our portfolios were just starting out on their kind of employee engagement and diversity journey. So hence we started working with yourself, Anya, and the Diversio team on how to help companies that are often small but multinational in assessing some of these kind of employee metrics. We, as an investor, think that one, understanding your employees is super helpful and super important to kind of the well-functioning and running of the business. And we want to also encourage companies to speak to their employees to understand, actually, do we have a culture issue? Are there things that we could be doing better? Do we have an issue around attrition? Why is that? What are what are employees feeling? How can we support them better on that? So a really good example of this is one of our companies, which is a multinational kind of software research platform. 85% of their workforce, I believe it's around that number, work remotely, and they're global, right? So that's a really big kind of cultural challenge to kind of jump over, especially as they're also highly acquisitive. They acquired a lot of businesses in North and South America recently. So they are actually utilizing Diversio to help them understand what their employees are feeling, but also how to build a cohesive structure, a company culture. So trying to figure out actually who's feeling lonely, who needs more support, what can we do? They've created these like virtual kind of like water fountain talks like they have in America. And there's similar things in the US, in Europe. They've created online kind of Slack channels where people can just literally share like pictures of dogs and things like that. So they really use this as a way to help build that culture and maintain employees and that employee loyalty as they grow, which isn't always the easiest thing to do. So that's one company that's found this really useful. I think we have a few others with similar kind of experiences within the portfolio as well, but the feedback is always like, how can we keep doing this for longer? How they want to see the change year in and year out. But for us as an investor, also, what's really important is the ability to use the platform, but also to gather kind of diversity metrics. And to then utilize that to have conversations internally around potentially setting targets around some of this, or providing support to those underrepresented groups to ensure that there is kind of a good cohesive culture.
Yeah, Yeah, that's I know exactly what you're talking about, and it's been a pleasure working with them, and a lot of your other report codes as well. Emma, maybe I'll turn it over to you, and you have a lot of experience working with all sorts of different organizations who are looking to collect information, do reporting, not just this sort of reporting, but other reporting as well. In your experience, what is sort of the recipe for success, if you will, when it comes to mixing the need to report or how to report with the kind of companies' attitudes around reporting and companies making use of the data beyond that?
Yeah, it's a great question actually, because I think what we've seen with CSRD is, as we've sort of already touched on, this is the most extensive and probably most challenging reporting regime that many corporates have ever seen. And we indeed work with clients all the time in sort of helping them establish the right reporting methodologies, the right reporting processes, and ultimately get the best quality and accurate data to report on in relation to various sustainability topics. And I think the challenge that we often come up against is, first of all, the availability of data. And if for some companies, in fact, for most companies, there is an area of the ESG agenda, but especially, this concept around own workforce, where they'll be collecting this data sometimes for the first time. And we spend a lot of time with those companies to really understand, where is the data coming from, who owns the data, how do we improve the processes to collect that data to make sure that we see an improvement in either availability or accuracy. But then also, how do we sort of take away that reporting burden? And just as you've mentioned, this sort of concept of reporting for the sake of a regulation, but really help companies understand what is the value in this data. And I think we've just heard some great examples of sort of how that value creation piece plays out through S1 and sort of own workforce data. But I think particularly with this topic, this isn't just about employee information. It also touches on concepts such as working conditions. What are the working conditions of your employees? How do they do overtime? Do they do part-time work? How does their work-life balance sort of play out within the context of what their job is or what the role is that they're fulfilling? How are they paid? How do you think about salary structures and sort of benefits and bonuses? Health and safety is a huge one. And if you think about sort of some of the more, engineering type or manufacturing organizations, this is a huge risk and does pose a reputational and significant individual personnel risk if we don't get it right, making sure that a workplace is safe, and that we have the right controls in place to make sure that your employees are well looked after, and of course their safety is paramount. How much do you train and educate your workforce? Are you really growing careers? Are you making sure that your workforce continues to receive investment so that they stay with the organization, which is very important in terms of minimizing attrition, but also so that they have a fantastic career journey in working with your organization. So there are some, it's a very broad range of topics that we're talking about here in this regulation, but every single one of them has such an important role to play to make sure that the conditions and the environment that your workforce experience in your organization is as best as it can possibly be. And that, of course, drives real commercial outcomes.
Yeah. That's very, very true. And I thought it was interesting as well, the kind of, you touched on this a little bit, like the risk part of it. And it is, and I find that when we work with organizations that do have reporting needs, a lot of the time, or any organization really that's trying to collect this data, a lot of the time, one of the challenges that they're faced from their own legal department or just, trepidation in starting to collect this information is there's a need to report out on something, but there's also other legislation at play in all of the different regions where you'll have your employees that, will dictate what you can and can't collect. So, and at times it can actually be almost at odds or seem to be, okay, like we need to do this, but it's also like scary to do this because, what about GDPR or what about all these other privacy legislations in other parts of the world? And I think one of the things that we've done is we've heavily invested in creating this basically database of knowledge of what we can collect where, because the legal jurisdiction in Italy is going to be different than like Spain or Argentina or where have you. And so I find that really helpful. But I guess, for a company that doesn't, and like we do this like obviously for a living, but for a company that doesn't have this readily available, what are some kind of what are pieces of advice, I guess, you would give of like where they should be started, what they should start thinking about, and how they should start approaching it, I suppose, Emma?
Yeah, so I think, and maybe if we talk about sort of starting to collect this information for the first time, I think there are a number of challenges that we often see. And the first one is around the availability and accuracy of data. So this is really making sure you're clear about what data you need to collect, whether it's for CSRD or more broadly for your sort of private equity managers or investors. What are the demands on your organization in terms of data availability, and how do you sort of really get a good grip on what is the data that needs to be available year on year or more frequently in order to satisfy those stakeholders. Then it's about making sure you've got the right processes and controls or systems in place to produce that data, that you've got the right controls to make sure the data is accurate. And interestingly, we've been doing this for a long time, actually in excess of 12 years. And over that time, it was always about sort of best endeavors data collection. And more, we're seeing a drive for the data has to be available, but it also has to be right. And we need to be able to assure and sort of verify that data is correct. So it's much more focused on the accuracy of that data. I would say as well, just making sure, you're clear about the definition of that data. As you've just mentioned, it's different markets have different challenges in producing that data, both from a regulatory standpoint and also cultural. What's the definition of the data? Making sure that you've got a like-for-like comparison between one market and another, and that data is really valuable. And then finally, I would just say stakeholder engagement. So it's important that your organization recognize the benefit in collecting this data. And that's really about communication and stakeholder engagement, and making sure, you understand what you're going to do with this data once it's available, not only to fulfill a regulatory requirement, but also what could you do with that insight, and how could you use that to continue to improve the performance of the organization.
Yeah, definitely. I saw you nodding. I feel like you can relate because your company, so many offices. Please, share your perspective.
Yeah, and I was just going to say, like, I think one of the biggest challenges, especially for the companies that are doing this the first time, is it's taking that leap and jumping over that hurdle. One of our biggest challenges when we're talking to companies for the first time and really encouraging them to start asking these questions and making these measurements is, one, we're not ready. Two, our employees are not ready. This is, potentially going to be challenging culturally. Different geographies do not have this norm of having employee surveys on a regular basis. This is very much like a US, UK driven thing sometimes. Also, different geographies have work councils. So we've had to work with the works councils in Germany, for example, to clear kind of all of these questions that we'll be asking through them before we send them out to employees. So I think the first challenge is actually getting on board, getting the buy-in from management, going back to my earlier point around like making sure that they're brought into this. The teams that will be leading this, and often it is the HR teams. The communication of kind of why this is important, why we're doing it, and the outcome. So what are you going to do with that data? As Emma was saying, like, there's any kind of ESG or sustainability data, if you collect it and don't action it, it's dead data, and you're going to lose credibility. Like, you have to have a plan on what you're going to do to be able to address the issues, or maintain the good things that come out of that survey. Hold on, because I had a few points there. So I think, getting everyone on board is super important. Also, working closely with legal. I know it can be scary sometimes, but either legal or other really trusted advisors who know what the kind of labor laws and practices are in the different jurisdictions is super helpful. But really just building that trust and figuring out how to communicate this internally, that you're going to be asking these questions, and being really open with your employees about why and what and how will get their buy-in. We've seen actually the companies that communicate better upfront that the survey is coming have a much higher response rate and a much more trusting process. And therefore you can, to the quality of the data, then you can actually use that data much better than if only you have like a 14 or 20% response rate, compared to if it's closer to like between, I guess, 60 to 80 is the optimal. So I think that's super important. The other thing I was going to say is also there's lots of data being asked from different stakeholders, and just the recognition that that it is starting to coalesce, right? So this is one thing that we try to communicate to our portfolio companies, is that we ask them on an annual basis a lot of ESG and sustainability related questions. They can then use that information for other internal purposes as well, right? So we ask around attrition, FTEs, headcount, diversity, and they use Diversio or their own engagement surveys to gather that data, but then they have a single point of truth. So for then that information they can use for, often their lenders require some of the disclosures, regulations require disclosures. We're also finding that in the value chain, sometimes their customers are asking for this information. Often it has to do with environmental, but sometimes actually, to Emma's point, around health and safety and labor practice as well. Like, customers, if you're in a supply chain, customers want to know that you are kind of managing those risks and, taking care of your employees well. So I think even though CSRD seems like it's quite big and potentially burdensome, like there are synergies that are coming out. People are asking, or stakeholders are asking similar questions. And when you get that kind of, so the importance here is to have cross-check all definitions of how you're defining things. Like one of the biggest headaches we have is helping companies understand the difference between FTE and headcount. It doesn't feel like that's like a difficult thing to do, but some companies don't measure both. And you really do need both for different metrics later on. So, really getting down to the definitions, understanding what they are, and understanding what information you're reporting out afterwards as well is important.
Yeah, that's a great point. I think also I really liked what she said about involving employees in a meaningful way in the process, and then also giving something back to them as a result of them sharing the data. Because I think a lot of companies sort of, from a regulatory perspective, when you have to do something, you can sometimes almost feel like you're imposing that on your people. But this is, in some cases, this is quite sensitive information and it's very thorough information. And if you're not bringing your people along as to why you're collecting it and then not giving them back something in return for sharing this information about themselves, they're going to be quite resistant to participating in something, because at the end of the day, your employee doesn't have that regulatory requirement. It's yours. So like the employee doesn't feel like they need to give you anything. And in fact, a lot of the time, again, it is sensitive. So if they share with you their identities or who they are, or how they're experiencing the workplace, and then you don't do anything about it or you don't follow up, then what is the motivation for them to do it again? They're going to be like, listen, I spent my time, I did this, and then it just sort of went into the ether and I never heard anything about it again. So that's why I think that the best companies for us to work with are ones that, yes, we have to report out on this, but then also we have a responsibility to our people, now that they've shared this information with us, to go back and to kind of involve them in the process and to tell them how we're going to act on the information that we did collect. Because a lot of the time it is very eye-opening and it does sort of show you things about your organizations that you didn't really know previously.
Yeah, I think that's right. And, we really do encourage all our companies to take action afterwards. I think it comes down to that trust point, right? Like your employees need to trust you, know that that data is safe, that data is anonymous, and that you will be doing something with it. But the first time you do it, the first time an organization goes through it, it's a really it can be a really time-consuming process, because you have to take into account all of that communication, hear the employees' worries, and make sure that they are addressed before you launch the survey. Otherwise, low participation rate, and then you can't do anything.
Yeah.
And I think maybe just to add to that, Anya, I think you really need to be prepared to not necessarily love what you hear. And that I think is always a little bit of a hurdle for our organizations. And, some of the data that we're talking about here is quite static. Some of it, like employee engagement, is incredibly insightful. And I think for companies, the first time that they do that, the insights that process generates are absolutely phenomenal, and it's not always positive, but actually that is where the most change can happen and where you can get the best results, by really listening and acting on the feedback that you're hearing. And it also, I think, going through that process, even though it feels like a real investment in time, which it is, it creates such a strong culture of trust and communication and transparency between leadership and the business. And, I think that really sets up an incredible foundation for sort of good cultural growth as well. So, of all of the ES&G topics that we cover, I think this particular topic is one that really sets a strong foundation for a business if the leadership team are willing to invest in the work to sort of act on and improve what they're listening to.
Yeah, that's very well put. Emma, do you have any kind of, for companies that do have these reporting needs potentially for the first time, or they're, they are extensive, to your point, much more extensive than companies potentially have been used to previously. What are some tips and tricks that you might share for an organization that's like panicking and they're like, oh my God, I don't know what to do. I don't know where to start.
Yeah, it's a great question. And even though the timelines that we looked at the beginning of our discussion feel a little way out, it feels like, oh, we don't need to report until the, 25, 26, 27 reporting deadlines. It is extensive, and preparation is key to make sure that the data is available, the data is accurate, and that your business is sort of on board for the amount of content that needs to be surfaced and reported onto the regulator. But I think in terms of, preparation, we really think about the lead up to CSRD in 4 areas. So the first one is around scoping. So CSRD is a fairly technical regulation that deems some legal entities in scope and others not, depending on your legal structure. So I think really getting your head around what entities am I reporting on within my organization if you have more than one. The next is training, and we do a lot of training with our managers and then to their portfolio companies. So we work with huge volumes of portfolio companies. We're put there as a partner of the manager to really make sure that the companies are aware and educated as to what CSRD is, what it means for the business, what the process is going to look like. But again, it's all about that buy-in and sort of company engagement. Then we're increasingly conducting something called that double materiality assessment, where we look at all of the ESRSs and work out which ones are material and therefore need to form part of the reporting structure that companies need to report on when their time comes. And that double materiality assessment can be quite involved. That requires mapping your entire value chain, so suppliers and distributors, and working out for all of those stakeholders in my value chain, which topics are material to those stakeholders. And so it's not just your company that you need to think about in terms of material topics, it's the entire stakeholder group that is in and around your organization. So mapping that out, interviewing them, or, really sitting down with management and understanding what topics might be relevant to them based on where they are, what they do, what their workforce looks like, for example. Once we've got that assessment completed, that determines what material themes are required for reporting. And then we look at something called a gap analysis, where we say, these are the 5 topics that you need to report on as part of CSRD. Are you ready? Do you have the data on those 5 topics? Do we need to start engaging your suppliers or distributors already to make sure they're starting to collect that data if they don't already, so that when the reporting deadline hits, you can feel confident that you have everything you need and you've got a year's worth of data available in order to submit that report. So there's quite a bit of preparation, and that's really where our team is focusing on right now, getting companies in good shape for the reporting deadline.
Yeah, that is a lot. And I can understand why it would be overwhelming for companies thinking about it. This is kind of a curveball question, so forgive me, but if you think that, I'm really putting her in the spot, but if you think about the companies in your portfolio that have historically been on the ball with reporting and really sort of front foot, and they're always, if there are any, and they're have it when they're supposed to have it, etc., all those good things. And then companies that have maybe struggled a little bit more and to get the data or the robust data, or just struggled with reporting generally. What are some commonalities to the companies that typically get it right, and commonalities to the companies that maybe struggle a little bit more?
I think it's a maturity question as well. It takes time. So, we don't expect to have perfect data in year one. We kind of always tell our companies, actually start. Don't be afraid. It doesn't need to be perfect, but you need to start somewhere. And then over our investment period, which is usually between kind of 3 to 7 years, let's say, that data quality improves. The first year is always super challenging. It takes a lot of time. It takes a lot of effort. But a commonality with the ones that do it well is, 1, they've been doing it for a while. 2, they have a point person, like an internal coordinator and senior leadership sponsor, or kind of board level representative who make sure that this is on the agenda. This gets the the time that is needed and the resources that are needed to actually carry this out. And make, it's held to account, to make sure that data is collected, it's monitored, it's assessed and analyzed and actioned. So I think the companies that do it well in our portfolio are the ones that have a person that kind of whole role is around sustainability and even, I'm talking more broadly kind of ESG sustainability issues, which are very broad, but that role sometimes is a coordinating role to make sure you're bringing in place or bringing together the right individuals within an organization that need to have input into this, because CSRD is also structured like this quite broadly ESG kind of old school non-financial data points. But as we can see, like the social elements really bring in the HR functions, the people functions, together with finance, and then also the environmental functions, procurement, supply chain. We often, Emma's point around labor practices, we ask our companies to also look into their supply chains and what are the labor practices happening there. So it's a really big effort, but there's so much value in basically having that holistic picture and understanding actually where are the overlaps, where are things that we can leverage that we're doing in one department that we're doing in another, and where are we good at, where do we need to improve at, and having that kind of high level picture, because kind of the point of CSRD is also, it's not about perfection, it's about showing progress, and kind of disclosing where you are as well. So I would recommend people not get scared off by saying, oh my God, we have to do so much and we don't have it. Actually, my understanding of it is that it's totally okay to say, these are our material topics, this is where we are on our journey, and this is how we're going to be improving it in time. Like CSRD will be an annual disclosure that you have to report and sign off on. So kind of no one expects perfection in year one, but they do expect kind of annual improvement. So yeah, and get someone to coordinate is probably my main point, and have a senior leader sponsor on this as well.
Yeah, for sure. I think that you made a really interesting point in the end as well, that there's a point to the government or regulatory bodies or what have you asking you to do this or to report out on this data. Like the point isn't just to have the data and then you're good and thank you, goodbye. The point is that to improve. And the point is, so having that longitudinal view and then saying, okay, there is a reason why this is being asked, and the reason is for us to get to a better point or get to a better level of performance, whether it's, on environmental or diversity or governance or whatever it is. And sort of having that mindset becomes really important. And in that case, it very much aligns with your other point, which is that it's important to start. And then if you have the data, you have the numbers, it's your foundation, and you kind of build on that. It is a multi-year effort in the sense that it's going to be implemented now, but it's going to continue through, many, many years. I think the other kind of interesting thing and sort of question for you is, when do you feel like, and there's I don't think there's the right answer to this, but so I don't know if I'm setting you up for success here, but when do you feel like there is the right time to hire a chief sustainability or head of sustainability officer? Because, obviously smaller companies, there's budget and your considerations, and you want to invest in the right area. But then at what point does it really kind of pay off to really start having that? And what does that person do, when they're not looking at reporting? How can you best leverage that role?
I think it really depends on the organization and the company and where you're at. So I said that the ones in our portfolio that do best have a dedicated role for this, but the majority still don't. And the way they get around that is they actually have someone usually quite senior to take the lead on it, and it's we're kind of moving towards it being part of their job description. So it's not 100% of their job, but it might be 50% of the job, and they can delegate down, but they have the authority to delegate that down, and then those other individuals know that part of their job is to actually contribute to this. It's not just a nice to have passion project, but it is actually something that is super important to the business. And I think that's key, because I think it's great when you have people who are passionate about what they're doing. But I think in many organizations that are just starting out on this, you need to also have the authority and the integration into a job description that this is important for the business and we want you to take responsibility for this. So I think that's one way to work around it, but that requires a lot of coordination. And I think for smaller companies, this works well as well. Often, we have these conversations internally within our team all the time, is that, we're all generalists. Like I am not a people or HR person by no means. I've had to learn a lot over the last few years around this, but I still work really closely with our people and talent and HR people on this, because they are the ones driving this forward. But I can say these are the priorities that we're seeing from our investors, and this is what we're seeing up from our portfolio companies. How can we work together to try to move this along? And this sort of fits into kind of my early point, and what point you were making is that, we would, for many of our companies, we've been working with them for 3 years on just collecting good quality data. And now we're at a point where we're starting to have discussions around targets and objectives. So, and that's where actually that coordination with our head of talent who works with our portfolio companies is super important, in terms of if we want to start setting some targets around diversity metrics in the portfolio. Understanding that it's a coordinated effort, but also that it took us many years to get to the point to even start discussing targets. It doesn't happen overnight, and it requires a lot of internal and external stakeholder discussions and consensus building.
Yeah, 100%. The targets point is very, very important. And even and it's a sensitive topic. Like it's a very, and even we talk about goals or targets or what have you, and having them internally versus externally imposed is very, very critical nuance. I think, Emma, how do your companies that you work with think about that particular side of the coin, the opposite side of the coin for reporting?
Yeah, it's actually a really great question. Aga, I was going to just maybe continue in sort of your train of response, because I think what you touched on at the end there is really important, which is, even if you have a head of sustainability or ESG, this is not financial data as produced by the CFO. ESG is so far-reaching and sort of encompasses every part of an organization. And I think even if you were to have a head of ESG and sustainability, with a lot of our portfolio companies do, and a lot of our managers do increasingly, just given the reporting burden and this progress or focus on value creation and improvement now, which is a full-time job by all stretch of the imagination. But I think unless you have ownership and that ownership is fully integrated into the organization structure, the role descriptions of everybody that sits at the leadership team, and it's not just sort of people data comes from HR. You've got workplace data that might come from facilities. You've got kind of safety data that might come from the engineering team. It's a real team effort, and I think it's important to work out, where is this information going to come from? Who owns and is accountable for the performance of the business with regard to that particular metric or topic? And, for sure, that's often coordinated now, given it's such a broad range of topics by an individual. But where we've seen this work best, it's where there's a real sense of understanding, ownership and accountability by the entire leadership team for various aspects of the ESG challenge.
Yeah. Wow, we really made some headway through the topic today. I think if we were to, and I know that we're kind of approaching the end of the session, and Kate, if there's any questions, please kind of ping, or any remaining questions from the audience, please kind of send them to me. And folks who are listening in, please, if you have any other questions that we haven't answered, please submit them. But in the meantime, as we're looking to leave hopefully with some parting words of wisdom, which I don't know how wise we can be towards the end of this conversation now, after having said all these things, but I guess maybe if we go kind of in order, Aga, maybe starting with you, anything that we kind of haven't covered that you think might be important for either investors or companies who need to be tackling this now?
I think just reiterating is just start. Kind of, it's not going to be perfect and it's not going to be easy the first year, but it does get easier. And so kind of don't be afraid of starting in all senses, in terms of the data quality that you collect, the types of information that you'll get back. but also make sure that you are communicating this internally with leadership and employees so they understand the value of it and why you're doing it. Yeah.
And Aga, maybe even to double click on that, what about any kind of advice you might have for investors who have port codes that are doing it for the first time? Because obviously you're driving this from an investor perspective. And how would you recommend an investor sort of show up and support in a meaningful way?
Yeah, and I think, I'm biased. We work with, our portfolio companies, and we have a very specific way of working with them, which is much more of a partnership approach rather than a kind of a mandate approach. So one, understand that business, understand that portfolio company. What are their challenges and what are their priorities? And sometimes you have to realize you have to back off because they're in the middle of a kind of a financial situation that they have to do, or a big M&A process. So some of it comes down to timing. To help them see the benefit in this. So again, it shouldn't be that kind of investor says you have to do this or a regulator says you have to do this. I really am not for the stick approach. I really think the carrot approach really works, helping them see the value in this. Three, like, we do it as well. So I think that's part of that kind of story. Say, actually, we see the value as an organization doing this ourselves, and therefore, we think that it's beneficial to you. It kind of gives you that credibility. So those are probably the main three things.
Yeah, no, I think, and sorry, there's a question that was submitted, so I was just reading it, but I think that's a really good point. And I also think that from a portfolio company perspective, sometimes, like, it's funny because the first time around that we were doing it, it felt like, some companies, weren't open to it, but then it turned out they are open to it. They're just stressed out. Like, they have lots of things going on, to your point. Like, maybe they're going through like an integration, they're just acquired. Like, there's a lot happening every day from a business perspective. And as soon as we opened up like the data collection period, so many more companies that are now coming in and being like, no, I do want to do this. I just, we have other things that we're focusing on. So I think kind of giving them that grace that you mentioned becomes really, really critical, for sure.
Yeah. And that's actually a really valid point. So for those on the call, like, we initially said you have to do this within like this 1 month period, but then realized actually we opened it up to a 6-month period, and the companies have a few weeks to do it in that time. And it becomes so much more accessible to them because they can work around their specific schedules, or, not do this in their busiest time of year. So they found that super helpful. I think the other thing also is kind of an investor is also get the investment team on board on this. I think it's super important to have them understand the value in this, and often relay some of the metrics that you're collecting into financial data. So, like, actually, we found that we have a really high attrition rate. This is an example, we don't, but if you have a really high attrition rate in a company, you can say, actually, this is how it's going to translate into recruitment and training costs for new employees. And if that is big enough, it's going to have an impact on your EBITDA. So actually translating that into those kind of terms, it really perks up the ears of some of the investment teams and gets them on board onto this.
Yeah, 100%. I mean, right now, employee churn is the biggest cost center, or employees generally, in the organization. So you want to do anything that you can to prevent that. And then also to make sure that employees are productive and empowered to do what you hired them to do. And employees are productive when they're included and happy and feeling good. So, virtuous circle. So the question that came in, and maybe Emma, I'll turn it to you for words of wisdom, and then hopefully some words of wisdom particular to this question was, clearly someone from who's listening and worried about getting started. So what are the consequences and the impact of not doing this correctly the first time that I'm doing this? So maybe, any words of wisdom you have in assuaging fears of getting started.
Yeah, let me start with that. And I think, Aga, you said this beautifully, which is this is a continuum. CSRD is something that you'll be doing every year, when you finally sort of start commencing, or starting with your CSRD reporting. And I think, there is quite a bit of leeway in sort of understanding that this is a maturity question and a learning opportunity for all companies. And like we said at the beginning, for some companies, in fact, most of the companies we deal with, it's the first time they've ever looked at anything quite so technical and far-reaching and challenging. And I would say, just to sort of echo Aga's point, just get started. And, you will not have all the data in year one. Your material themes that you might need to report on will change as your business model evolves, or as you learn more about your value chain and your sort of stakeholders. And I think the interesting thing about CSRD is when we talk about the assurance of CSRD, what they're assuring is your process, not necessarily your output. What they want to know is, have you given this some good thought and sort of have you rationalized what elements of CSRD are material and important? And as long as you can evidence your thinking around that and how you've approached it and how you've kind of come up with the important topics that you wanted to report on and monitor going forward, you know, that process is sort of what's being assured, and you know, so really give some thought and planning to how you want to approach CSRD. And then I would just say, you know, as we've seen with all ESG reporting, the quality and the insight that delivers will improve year on year as the business gets more comfortable and has a deeper understanding of what's required.
That very well said. And you know, on this side of the pond, we have a less eloquent way of putting it, which is like fake it till you make it. But in the spirit of it, it's very, very consistent. You just, you know, you do your best, you give it your best shot, and then hopefully you improve year over year. Ladies, thank you so much for joining us today. This has truly been a pleasure to discuss with you, and I think that you shared some really meaningful insights and tips and tricks of how to get started. It is intimidating for a lot of companies probably to think about, and you know, I feel better personally, and I think that lots of companies would listening to your advice. So thank you again, and to everyone in the audience, if you have any questions or concerns or worries about getting started or how to talk to your portcos about it or anything at all, please reach out to us, and we'll try to share you know, some thoughts and further feedback. Thank you so much to both of you. Thank you so much, Aga. Thank you so much, Emma. And we'll see you next time.
Thank
Good
you so
luck
much.
with reporting.
Good luck.
Bye. See you soon.